Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. In this video, we'll be talking about 5 mid-cap stocks which are worth considering in the current market scenario. Now please be aware, this is not our own research. We will be providing the link to the source for this video in the description section. Also friends, if you like the content that we produce on our channel, please don't forget to like these videos, share these videos, and if you have not yet subscribed to this channel, please go to the red subscribe button below, click it so that you get notified of any videos that we upload at the earliest. Also friends, we have gone ahead and created a new channel to discuss items other than stocks. The link for the same will be present both at the top of the screen and in the description for this video. Please watch this video to know more. Now the first stock on the list is NBCC India Limited, which is available at ₹65 and the face value for it is 1. The symbol for it is NBCC. Now NBCC Limited, formerly National Buildings Construction Corporation Limited, provides civil engineering construction services. Now this Navratna Construction Services company operates in 3 segments, which are project management consultancy, real estate development, and EPC, which is engineering, procurement and construction. ICICI Direct believes that the company is set for a significant ramp-up in operations in 2019-20 with the clearance of 2 major redevelopment projects in Delhi. However, the brokerage is concerned about the company's desire to acquire JP Infratech's assets, which could lead to some balance sheet stress. Now looking at the 1-year chart, the company has been an underperformer and a lot of wealth has been eroded here. The company has a market capitalization of 11,700 crores, which means that the company is a mid-cap one. The EPS of 2.07 translates into a price to earnings ratio of 31.40, which is slightly more expensive when compared with the industry PE of 25.57. The price to book ratio of 6.42 is however on the high side. The company has a dividend yield of 1.28%, whereas the promoter holding is a strong number and stands at 70.57%. Also, none of the promoters holding is pledged. With the 52-week high at 109.20, the stock has really corrected massively, and this provides a margin of safety for new investors in this particular stock. The 52-week low stands at 47.20. Now the second stock on the list is L&T Finance Holdings Limited, which is available at ₹145.80 and the face value for it is 10. The symbol for it is L&TFH. Now this NBFC operates across segments like rural, housing, wholesale, mutual funds and wealth management services. According to a report by JM Financial, the company is likely to deliver sustainable ROE due to its prudent capital allocation, higher share of retail business, diversification of fee income, operating leverage, and increase in the profitability of its investment management business. The brokerage expects earnings CAGR of 40% between 2017-18 and 2020-21. Now, as is evident from the 1-year chart, the company has not really done much in the recent past and has been an underperformer. The company is a borderline stock between a large cap and a mid cap with a market capitalization of 29,142.68 crores. The EPS of 1.94 translates into an expensive price to earnings ratio of 75.15 when compared with the industry PE of 38.10. However, remember that these are standalone numbers and the consolidated numbers may vary. The price to book ratio of 3.82, however, is not so expensive. The company has a dividend yield of 0.69%, whereas the promoter holding for this stock is a strong number and stands at 63.96%. Also, none of the promoters holding is pledged. The 52-week high for the stock stands at 189.50, whereas the 52-week low is 110.65. The third stock on the list is Sun TV Network Limited, which is available at ₹616.55 and the face value for it is 5. The symbol for it is SUNTV. Now, Sun TV Network Limited is engaged in providing broadcasting services and operates through the media and entertainment segment. Its geographical segments includes India and others. Now, this media and entertainment company has 32 TV channels and 45 radio stations and caters to several Indian languages. According to a report by LKP Securities, new content in the Tamil markets, higher ad rates and entry into Bangla market will improve its revenue in the coming quarters. Additionally, the boost from IPL, higher revenue and lower costs will improve margins. The brokerage house believes that the stock is currently trading at an attractive valuation and expects 26% CAGR in net profits over the next 3 years. Now looking at the 1-year chart, this company has been an underperformer and a lot of wealth has been eroded here. The company has a market capitalization of 24,297.29 crores, which indicates that the company is a borderline stock between a mid-cap and a large cap. The EPS of 35.56 translates into a very cheap price to earnings ratio of 17.34, which is also very cheap when compared with the industry PE of 27.57. The book value of 117.74 translates into an expensive price to book ratio of 5.24, whereas the dividend yield for this stock is 1.62%. One strong factor for this company is the very strong promoter holding, and this stands at 75%. However, a slight concerning factor is that 2.81% of the total promoter stake is pledged. The 52-week high for the stock stands at 999, whereas the 52-week low stands at 486.55. Now the fourth stock on the list is the Federal Bank Limited, which is available at Rs 92.35 and the face value for it is 2. The symbol for it is FEDERALBNK. Now the Federal Bank Limited is a banking company which operates through 4 segments, which are treasury, corporate or wholesale banking, retail banking and other banking operations. Now this private sector bank based out of Kerala has 1251 branches and 1668 ATMs across India. Although it has faced trouble in 2018-19 due to floods in Kerala, its expansion plans are likely to provide much needed growth and diversification. Financial services firm Stewart & McAtich is bullish on the company due to its clean books, focus on multiple verticals and healthy return ratios. Now looking at the 1-year chart, the company has been choppy and no major wealth has been created here. The company has a market capitalization of 18,329.10 crores, which means that the company is a mid-cap one. The EPS of 5.08 translates into a price to earnings ratio of 18.18, which is very cheap when compared with the industry PE of 37.06. The book value of 61.51 translates into a price to book ratio of 1.50, which is also on the cheaper side. The company has a dividend yield of 1.08%, whereas none of the original promoters of the company now hold stake. The 52-week high for the stock stands at 105, whereas the 52-week low is 67.05. Now the final stock on the list is Crompton Greaves Consumer Electricals Limited, which is available at Rs 223.70 and the face value for it is 2. The symbol for it is CROMPTON. Now Crompton Greaves Consumer Electricals Limited manufactures and markets a range of consumer products. The company's main products and services include lighting products, which are luminaries and light sources, and electrical consumer durables like fan and appliances and also pumps. It operates through 2 segments, which are lighting products and electrical consumer durables. Now HDFC Securities expects that the company's performance will improve due to its go-to-market strategy, lighting revenue growth, likely margin recovery and cost savings program. The brokerage expects a 22% earnings CAGR over the next 3-year period. Now looking at the 1-year chart, the company has been an underperformer and a lot of wealth has been eroded here, and generally the movement has been similar to that of the markets, which have also underperformed. The market cap of the company is 14,024.99 crores, which means that the company is a mid-cap one. The EPS of 5.81 translates into a cheap price to earnings ratio of 38.50 when compared with the industry PE of 52.68. The price to book ratio of 17.77, however, is very expensive. The company has a dividend yield of 0.78%, whereas the promoter holding for this stock stands at 34.37%, out of which 16.79% is pledged and which is a cause for concern. The 52-week high for the stock stands at 273.20, whereas the 52-week low is 190. Now friends, this is not our own research. We'll be providing the link to the source for this video in the description section. Please go through the same to build more conviction around your investment decision. Also friends, please don't treat any of what you see on this channel to be recommendations on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended only to be a piece of news. Friends, also remember that there is an upcoming event risk, and that is the impending elections. Based on the outcome of the elections, there could be wild swings in the market, and hence it pays to be prudent with your money. So please don't just jump in. Go ahead and do your own research, take an informed decision, and only after your due diligence should you take a position. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so. Have a wonderful holy evening, and may your life ahead be filled with the most beautiful of colors. May God bless.